Good morning, everyone. Let's look at your markets for today. Start with the economic calendar as always. I've got some CPIs releasing in about 2 hours on the Swissy. I doubt if that'll give us, any significant volume, to be honest. The expectation for the CPI is to remain at 0%, and I doubt that would be anything else than 0%. It's been 0% before. It's been, I think, the last 3 months in a row or something. There was one where it was 0.4% or something, or minus, no, it was 0.4. It may have been minus 0.4%. Can't remember exactly. But other than that, it's been zero. So I expect it to see zero again today. So that shouldn't give us any volume at all, in my opinion. We've got the German. Is it just the German? Yeah, it's just German. Oh, and the French. We've got the German and French Purchasing Managers Index coming out about, and Italian, and the Italian, and the Spanish. That's coming out soon. Now, Germany is the biggest production country in the European Union. So the German one is usually the one that pushes the market one way or another. So all of these preceding it will just kind of be a build-up. It's like that 3, 2, 1, go. And then the Germany one comes out and the market goes. So that's the one I'm going to wait for. I do have trades open on Euro. We'll discuss that in a second. But it's a pretty decent thing to trade. It usually gives us a little bit of volume. I don't need a lot of volume to take profit. So I'm just scalping Euro at the moment. We'll see the pound release some PMIs as well. And then we've got the EU Leaders Summit. And this one for me, not the jobless claims alone, but the PCE. I don't know if you've ever known what the PCE is. Now, you should go click on this and read through that. It's probably the leading indicator of inflation that the FOMC uses in their decision for interest rates. So they consider three things. They've got to consider, obviously, gross domestic product. This is now on the US. I'm speaking specifically for the US Fed. They consider gross domestic product, employment or specifically unemployment rates, and then consumer sentiment. So the PCE is the one they use. The core PCE is part of their forecast report that they use to determine the inflation rate. And if they have the PCE at stable rates, then they're fine. There's no inflation. And if it comes up higher than expected, then they start getting worried, and lower than expected, then I don't think at the moment everything's lower than what it's supposed to be because of the whole COVID pandemic. So if you'll see, the current rates are 0.3%, where the year over year is 1.4. Now, the target percentage, or shall we say, the resistance price or percentage of the PCE is 2%. That's inflation targets as well. So if this goes above 2%, if either of them go above 2%, then we know there's a potential interest rate increase coming. Now, that won't happen in the near future because we do have the pandemic at the moment. So long term, if once the pandemic has run its course, I just want you to take note of this, that 2%, that's your target. If it exceeds it, you could potentially see an interest rate increase following the PCE index. The core PCE index is basically the normal index without food and electricity. So That's why it's the core one. Food and electricity tends to jump around. If there's something major like force majeuris, a tornado, for example, that the USA seems to see a lot. There's a tornado or something, the price of food, electricity, and everything, has a bit of a roller coaster ride. Whereas the core PCE price index excludes those, so it just looks at the other things in this basket of goods and services that it measures, and as a result, it gets a more stable reading on changes. So this is what they use to basically measure inflation. Now, we all know inflation target 2 to 3%, usually in normal circumstances, but we might see it exceed 3%, hopefully. I mean, if the US economy recovers, it will exceed 3%, and the Fed may just leave it there for a bit to allow proper recovery of the economy. That it is the whole watch and wait policy they have in place at the moment. They'll wait for it. They won't try and predict or prevent the 3%. They'll wait for it to reach 3% and then take measures to contain it, which is a good thing for the US economy. I think that's a good policy. Let it recover first, and then you start putting pressure on it again. So yeah, that's what the PCE is, and obviously want people to know that this is an important one. They put it at 2 stars out of 3 for volatility, but I think it's probably more important than the initial jobless claims at the moment. The initial jobless claims is not the final report. Now remember, on the first Friday of every month, which is tomorrow, we'll get the non-farm payrolls and the unemployment rates. Now, that's the big one for job claims. The PCE, in my opinion, is the big one. Remember, you also get the CPI and the PPI. So the producer price index and the consumer price index read together with the PCE. Those are the 3 core indexes they use to measure the actual inflation. So I think that's something to keep an eye on today. I don't think we'll see much volume because it should remain the same. With the pandemic, everything, there's a pretty big expectation for everything to just be low and be almost zero. So if you look at the CPI for Switzerland, as you can see, it is exactly expected to be 0%. There's no inflation in a pandemic-ridden country. That's basically the gist of it. So that's why this shouldn't, in today's news release, be a crazy difference. The 0.3% is what we expect to see, and I don't think it'll vary from that significantly. But yeah, all of these together could give us some volume on the dollar, and we've got building permits on the loonie, on the Canadian dollar. We've got that as well, expected to be much higher than previous. So I'd be curious to see if that delivers, or if it fails to deliver, we could see the Canadian dollar plummet again. We've got the manufacturing PMI later this afternoon as well on the US. I think by that time I would have been done trading already, or very close to it. So yeah, that's what we have to look forward to today. The EU Leaders Summit, obviously that's always a big thing, but I don't think we'll see much from it today. There's a speech coming later. That's going to be the key, lane. That's going to be key following the summit. So the summit itself is 3 bulls, but you won't know what's happening until the speech, I think. So that could see the markets move. So, but again, I mean, the ECB has a dovish stance at the moment, so I don't think we should see any deviation from the current policy until we've got the pandemic under control. I know that there was news yesterday that 3 vaccines are in stage 3 trials. So they promised to deliver by the 1st, was it the 1st of November, I think? They promised to deliver a vaccine. They've already got three vaccines in stage 3 trials. So it looks like they might just actually make that deadline. Anyway, so that is it for the economic calendar. A few things to look forward to. I'd skip the CPI and then just watch market open, jobless claims together with the PCE, price indexes, and maybe the building permits on the loonie could give you some volume, I think. Okay, we'll scoot over to technical summaries. We'll look at S&P up 0.8%, DAX down 0.5%, FTSE down 0.5%, Euro stocks down 0.6%. It looks like slightly down, slightly neutral. Up for the S&P. I think we're going to see this turn risk on, to be honest. With the news of the vaccines, in stage 3 trials, I think we could definitely see a risk on environment soon. Just ignore these signals. They're not relevant. If you change that, you'll see them change as well. So ignore the signals. Commodities, gold, it's neutral, and silver is pretty neutral as well. Almost up 1%, but I divide this by 10 actually to see if it's in line with gold. A move of 1% is the equivalent of a move of 0.1% on gold, in my opinion, as far as volatility goes. So yeah, that's pretty neutral, I think. Look at forex; they should be pretty neutral as well. Yeah, all neutral. I've got the Euro USD ranging at the moment, in my opinion. So let's look at it. Let's turn over to the charts. We've got some nice trades, all in the red, which is great. I know that sounds strange, but for me it's good. We'll start with the Euro USD. Look at this. That's right at the top. If this isn't ranging, then obviously, if it exceeds that level, I'll stop loss everything. But I think this is ranging, which means I basically got it right at the top again. So for me, a drawdown like this is really good because I don't make crazy big trades. I always leave room for it to have a drawdown if necessary. If I do expect it to range, then I can keep adding to it every time it reaches a new level. So I'm really happy with this at the moment. The fact that I'm drawn down this much is for me a good thing. It means I can get in at a better price again. So obviously, if it starts trending again, I do have Watcher on here. As you can see, these little blue arrows. If it gives me an up signal, I'll close everything out, regardless of what is happening. That indicator is really golden for me. It gave me this. I did a bunch of trades yesterday, all based on Watcher, and they've all been pretty good, I think. Let me show you, actually. Yeah, that's yesterday alone. Yesterday we had a few bad trades in between. You can see it's not all good. I had those break evens. You remember me saying I had to close things out at break even. I don't even know where they are at the moment, or that may have been the previous day's trades. But I had a bad trade there. I said buy on the dollar Swissy. It turned against me on this candle here, obviously, as you can see. But I didn't let the loss run. I got out as soon as I could, and it's a small loss. I'm okay with that. Euro yen. I had a buy order on Euro yen, and look at the actual chart. You'll see there was a huge drawdown, and I decided just to get out of the oversold area, and obviously close that out as well. I've had some good trades on gold. Obviously, there's one, and the other one's up there, as you can see. The Euro yen ones, I had buys down here based on Watcher, as you can see. Some good take profit levels, I think somewhere there. where price is at the moment. That's also give or take where I took profit. I think 123.850. Oh, slightly above it. So about here. Oh, basically at the top. Nice. That's always a good thing. Yeah, so that was a nice trade. We had the Aussie yen as well, something similar, with my little watcher saying it's still uptrending, so I'm happy with that. And then euro pound. Euro pound, I had a buy order somewhere here, I think. I think somewhere here. I'm not sure. I can't remember exactly. Euro yen price 123.269. No, that's the wrong one. I mean Aussie yen. Euro pound. I mean, there we go. 9125491. That's about here. Okay, so I thought with the breakout, I thought we're going to see it may have been, oh no, it was here. Yeah, it was this. I thought it was going to respect the support line on the deviation, but then watcher came on, and as soon as I saw the watcher indicator there, I closed out the all red break even, and lo and behold, it plummeted down. So watcher really saves my ass a few times a day, you know. Yeah, I had a break even on gold as well. I could have probably left this. Gold kept going up. It's still trending up, it seems. So I could have left that. Yeah, I mean, it happens. So yeah, this is just to show you how critical an indicator can be if it's the right indicator. This thing has saved my ass more times than I can tell. The key is just to listen to it. You know, if this thing says, you know, oh, there's momentum to the upside, and you're short, or vice versa, there's momentum to the downside and you're long, get out, and then it saves you. You know, it saves you money. And what more do you need than an indicator that actually saves you money? But anyway, so that was yesterday's results. I just thought I'd let you know. As I said, I've got some orders open at the moment that I think this was a reversal. It's ranging, so if this comes down, even if it just comes back to here, which is possible, it could not make it all the way. There's always the chance that could happen. I could close these out at break even and take profit on those two at this level. But that all depends on momentum. We'll see what happens. We've got that data releasing, so that could push it all the way. But if the data is against me, then obviously I close all of them out as soon as I can. So yeah, that's what I'm going to do today on that one. Let's look at gold quickly. Honestly, I think this is still trending up, but it's struggling with this level. So let's draw it in. See that level there? It was a support. There, support, resistance, and no, sorry, it's this one. Support, 3 times, and resistance level. It's starting with this level, this one. So we'll make that one purple, magenta, or whatever, just so I don't get confused with my key level. My key level for the day is usually white. The other ones should be either aqua or magenta or something, I don't know, just not white. Yeah, so we've got this key level that is struggling with. And if it breaks it, it should go to the magenta line there, that level. So yeah, I'm kind of just waiting for it to go up. It's a contradiction to my current trades, because this could potentially start ranging, or very likely create a triangle and consolidate. So because I do see the semblance of a triangle already. If you look at this, something like that, it does resemble a triangle already. So we've got this line holding and this trend line holding. So yeah, I'd just be cautious I wanted to keep going up, but obviously if it goes up, the dollar goes down. So we'll have to see. It could just be ranging at the moment. Aussie CAD, I mean, it's still in the channel. I'm not doing anything at the moment. If Watcher tells me time to go long, then I'll go long. And we could potentially see another move like this. I'd be happy with that, especially when it goes sideways. So we've got one big push up and then a sideways push. Then I do expect another push up. So we'll aim for this price, which is 0.96350, I think, give or take. Could even go higher than that. But yeah, that's pretty much what we're aiming for. So I'm waiting for Watcher to notify me, my little indicator to tell me it's time to go long. Aussie Swissy, yeah, I mean, this is creating a bit of a triangle. I just stay out of it. It's hugging this key level at the moment, so wait for the breakout. I think we've got the data coming on the Swissy, but I don't think it'll push it far enough. And also, don't base a trade on, if it breaks out on data, don't base a trade on that. I think just watch it first. Let it stabilize after the data release and establish a trend before you go, either long or short or whatever. It is, if you look at the actual deviation channel, it is slightly overbought, but it is at fair value. So, it could come down back to this level. Okay, actually, I'm pretty sure it will. Aussie yen, it's still trending up, so I mean, nothing's changed there. Just look for a better opportunity to go into the market. Maybe use this median line if it touches it again or something. Aussie Kiwi, right at the bottom. Yeah, this is a nice one. I could potentially see myself go long on this. So, just want to check this. Slightly above those two. But yeah, it looks to be respecting that line now. Needs to be on the wick. There we go. I could see myself going long. I could definitely see myself going long. Aim for this 38.2 line. So yeah, let's do that. Let's draw in this. Something like that. Might just as well open the trade as well. I'm pretty confident in that. Okay. What do we see on Aussie dollar? Obviously, we've got dollar weakness at the moment, so that's also trending up, but it's at median. It's not a good place to enter, so let me just do this. So we've got this trade open, but we have a very, very tight stop loss somewhere there. So that's supposed to be there. That's 14 pips. It's below the low of that candle. 14 pips. Potential take profit at that level. That's 37, give or take, pips. So it's better than 2 to 1. Happy with that. It's not a big trade, but I mean, the small ones add up. So as long as your risk reward ratio is decent, then you should be fine. Okay, we've spoken about this one. Euro Aussie, I mean, it's trending down, but it's kind of oversold at the moment, so wait for it to come back to median. You want something like like this, where it's at the bottom of the channel and respecting a line. That's where you want to enter. Okay, so big push down. Euro Swissy. Oof, that's all over the place. Yeah, just leave this alone for now. It's obviously very choppy. I don't trade choppy. So Euro Pound seems to be ranging in a upside down flag formation, consolidating into an upside down flag formation. So let's do this. Something like that. Move the points to where we need them to be. There and there. Close enough. Wait for the breakout. Easy enough, I think. It's ironic how this angle on the flag almost resembles the previous trend line. Actual fact, let's rate this just for curiosity's sake and look at where it turned. You see strange things like this all the time. So we could see it potentially respect that line again. Yeah, wait for the breakout. Now, flags are usually continuation patterns, so I would expect a push to the downside for it to break this level. And if it does, then obviously the next level would be there. And yeah, it's just wait for the breakout and trade that. Euro yen. Yeah, that's a good one. I think that's pretty much, as soon as this level where it's at now breaks, you should be able to see it go long to that level. No. That level. Come on. Well, this magenta line is on the daily. Let's put a new line in. There we go. It could easily go to the next level as well. If you take elliott wave into consideration, this move, don't ray. One, two. Was it control last time? Yeah, it's control. Yeah, this is unlikely. That's unlikely. I mean, leg 3 is not always equal to leg 1. It's leg 5 is usually equal to either 1 or 3. So there is a resistance line there, but I doubt we'll see that price. Not at this angle. Let's see. It's been a respected price before, so let's just shift it like that. We could potentially see that in long term. Euro strength versus yen weakness. Maybe. Let's put it in. This is not based on fundamentals, so it could change with the data coming out today. But if it does, I mean, why not? I already have trades open on the euro to the opposite direction. So, as you know, we've got this. So I'm saying that the euro dollar is supposed to go down, but the euro, what was it, euro yen, is supposed to go up. That's a contradiction. But remember, there's a base currency and a quote currency, and the yen can definitely go down. In this case, you know, pro euro yen weakness, that could definitely happen at the same time that the euro dollar goes down, because that will be based on dollar weakness or strength. In this case, you know, if dollar gets stronger, euro goes down. So just because there's one currency on both pairs doesn't mean it has to do exactly the same thing. They all have their own personality. And obviously we know that at the moment, you know, it's election time. There was a debate the other night, and at the time Biden was still leading the polls, as far as I remember. So that could definitely still be the case, and we could see further dollar weakness, but this line is holding. So from a technical perspective, if the line keeps holding this level, well, this zone actually, call it a zone. So you'll take this one and create that entire zone. As long as this zone is holding, I want to make it a slight reddish, warm orange, something, I don't know, something like that. No, that won't work because then I can't see my red candles. Let's make it yellowish, I guess. Gold. Yeah, that works, I guess. You know what? I know what I'm going to do. I'll make it pinkish. Let's find a nice pale pink color, like violet. That will work. Yeah, that works better. There we go. Okay, so as long as that zone holds, then I'm not worried. If it breaks the zone, then I myself would close these orders out and go long. So, yeah, that's pretty much what I expect to see on this versus what I expect to see on this. Pound dollar, is it following yeah, it is. It's following my projection. I think it had a bit of a sideways move first, but it eventually pushed up to that line, and now it's pushing up to the next line. It almost looks like I predicted the future, doesn't it? Up and then up sideways. I mean, look at the angle of this. It's almost perfect. It's almost perfect. I mean, how good a prediction would that have been? If it makes it, if that is the point where it reaches this price, I'd be pretty amazed. You don't get it perfect every time, but I mean, the angle of that move would just amaze me. But no, it could still just rock up to that price in the next candle or two candles. London session is opening in a few hours, so we could see that happening soon. Anyway, so that's pretty much what I expect to see there. Kiwi yen, it's slightly on the upper overbought area of this trend, so I won't touch that for now, unless this is a key level, so it might reverse at this level. You see, it didn't even touch it. Does that look like a rejection wick? It's a little small for my liking to say it is definitely a rejection wick, but we'll definitely see some push down to median again. But I'm not touching this. Similarly with this, it's also reached a key level and it reversed or bounced off it. This one if it wasn't on dollar strength, because I'm overexposed on dollar strength, I think this could reverse and push down to the support level of the trend line. Dollar CAD, I mean, this is just plummeting, isn't it? Again, key levels are holding. So how many key levels do we want to see today hold? This could be slightly up. The key levels are holding, so it could reverse. Dollar Swissy, I mean, the Swissy was choppy, so I'll leave that to stabilize. We should see it potentially break out of the channel because of the choppiness, the volatility and everything has just wrecked that channel's prediction abilities. So what's happening here? I see something forming there. That is probably the most fair value price on this currency in the last, how long? Week, maybe? 22 September, so it's more than a week. Slightly more than a week. That's fair value. If it breaks to the downside, sure, but it's holding, so probably could see it go up again. Same thing with this. What was this one? Yeah, if it reversed at a key level, and this reversed at a key level, I doubt we'll see more dollar weakness push through. This thing is still respecting that small channel inside the bigger trend. One of them needs to break. They can't both hold. So obviously we'll keep an eye on that. But I'm not trading on silver today. And that's just another dollar yen blank chart that I can close out. I use this for a different video anyway. Yeah, I think that's it for today. I just want to touch on something else. If you've never seen CPIs before, let's go back to that. I really want people to be able to understand the importance of it. Let's say CPI. Now, obviously, we've got PCEs and those things coming out as well. But if you click there and just go to the release URL, follow that link, you can actually get the rates. So this is the website where the data is released, and if you click on look for statistics and prices, you'll find consumer prices there, and here you can access it at a glance. You'll be able to see it when it comes out, everything, the reports come out, everything. So it's easy to get the information you need, if you want to actually delve into it a little deeper. Here's the previous one, so the next one that's coming out today will be available here. You'll just click there and go to it. So it's definitely possible for a normal person, an average Joe, to access this information, read through it, and try and understand exactly what is happening. Because consumer prices, inflation forecasts, those things are what drive interest rate decisions. Inflation, it's all about the battle of inflation. Fighting inflation is what the central banks are doing. That's their core purpose, is to fight inflation and promote economic growth at the same time. It's quite difficult, but you've got these links that's available. Economic forecasts, go to it, see what it says, read through it. Why not? The worst case scenario is you don't understand what a word in it, and then you go and try and figure out why. What does the word mean you don't understand? Detailed forecast from June can be found here. We'll click on that. It should download. It's not a big file. Download it. We open it up, and we should be able to see a forecast, of what they expect inflation to do. So just wait for that to load up. It seems to be a little slow. There we go. Yeah, Swiss economy in the coronavirus crisis. Fall by 6.2%. GDP expected to fall. Losses of income, consumption expenditure, restricted. Economic risks. They discuss everything here. You can read through that in your own time. Then you'll get the actual table. Now this is on the Swiss franc. They use a different table than the US. The US uses, yes, GDPs for sure. Gross domestic product obviously is important, because that measures the country's production and services. Then they have consumption expenditure, PCE. They have that in as well. And then employment is down there, and unemployment obviously. But the Swissy also includes the CPI in their forecast. And this is why I said it's important. They include the CPI in their forecast table. They also include exports, imports, and construction investments. So if they include imports and exports and the CPI, then we should look at this figure as a measuring staff of inflation. So if they are using it, we should be using it. So if CPI comes out on the Swissy and it's part of their table, it will move the market. Unless it's the same, in which case, obviously it won't. But if it's less or more than forecast, it should move the market. We should see it move the market. And because it's in the table, it's important. So they also have a PCE. They call it different things. So they've got the PCE is this one, and then the government consumption, so GCE, is that one. They include both of them, so you have to watch both of them. You also have to check construction investment and investment in equipment and software, exports and imports. All of them will move the Swissy. And remember, the Swiss is not part of the European Union. They have their own set of standards and forecast equations. So we definitely want to watch them, see if they, follow this. It would be quite interesting if you could find out exactly the formula they use. How much weight the GDP has versus PCE, for example, and versus unemployment. I'd reckon unemployment is probably the most important, with GDP following as a close second, and then PCE maybe third, but then imports and exports are also key factors. So maybe they weight them equally, like, each one of these has an equal weight. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 different things. If they add actually 11 different things, maybe I'd rather see them ignore this. Yeah, I don't know. So maybe they combine these two for 10 different things. I don't know. Maybe take a median of the two, and then give each 10% weight. I don't know. If you could find out what the formula was that they use to weight these in their table for the forecasts, you could easily predict an interest rate decision coming before it actually happens. If you've got these figures coming out and you've got the formula, as they come out, you adjust the figures in your own, create your own little spreadsheet with the formula, adjust the figures as they come out, and you can easily predict a price increase if you just knew what their formula was or what they weighted these. So that would be interesting to be able to find out. I'll definitely look into it, but I doubt if that information will be available to the public or even economists as a whole. But yeah, it'll be interesting. But I just wanted to show you the importance of these things: the CPI, the PCE, imports and exports. Obviously, employment and unemployment rates has always been important, and the GDP. So you can access the information, and everything's available. So maybe just look into these things. You can do the same thing on the US. I look at the US forecast quite often as well. So we know what their stance is. The Swissy, we know what their stance is. So do yourself a favor and just go look at it. Try and understand what's happening, to give you a bigger, broader view of what to expect. And I really would like to be able to just find out what they weight their different factors are on in their equations. But anyway, that's it for the video. I do hope it helps. Good luck and enjoy.